Hey guys, welcome. How you doing? I hope everyone is good. Okay. We had a trade last week. We had gold last week. We had GBP last week. I think gold. I said we should pause on it last week because I had some entries before, so I just left my entries. I didn't go for new entries. While on the GBP I went for the entries initially. Then I came out. Then I re-entered, and then I got kicked out of it. So that being said, today I want to still look into gold because gold seems to be very reliable at the moment because things are still uncertain. There hasn't been any certainty in place. So for that reason, gold seems to be the number one option to go for. And I mean, looking at the seasonal now, that means 24th will be the best time to go in. Okay, so this was the week before. The week before last week, we had the gold buy analysis to buy, and I was ideally looking to enter right here, but I think I went in somewhere around here instead. And then last week I just left it and I just held the position, and gold is here. So looking to buy on the 24th would be on Friday. So literally Monday all the way to Thursday, there will be no trading on gold. That's it, on gold. And then they'll be trading on Friday. And I mean, just looking at this would be where the breakout is. This would be ideally where you want to buy gold from. Or if it happens to pull back here, right here, would be the ideal part to buy gold from. So the thing is now is you might be looking, why am I jumping all the way straight in? First things first, I just don't want to waste time. I just wanted to cover this because today's session, I want to cover something a little bit different. And I've put this off for a very long time. So I think it's time to do this. So today I want to really talk about edging. I'm not really trying to do any analysis, but I really want to talk about edging and how are we gonna edge ourselves in the market. So to start off, let me just get people talking. Can you guys hear me actually before everyone's keep going? Can anyone hear me? You have Mukhtar here, Chris. I able see. Guys, it's not gonna be fun if I don't know if you guys can hear me. So just in case, I don't want to miss out anything. I don't want to miss out anything, and then I get anyone confused. So I'm gonna unmute everybody. Oh, let me see. Got a message. Oh, okay, nice one.
Hello?
Hey, Mukhtar, how you doing?
I'm all right. I can hear you, bro, but my network is kind of shaky.
Oh, okay, no problem. Uh, Thank you. Um, Thank you also, Abel. Okay, now let's do this. Does anyone know anything about edging? That's the first thing. Does anyone actually know anything about edging?
I just know that it just means you're buying and selling at almost the same time.
Okay, that's a good
But
start.
I don't know how to go about it.
Okay, that's a very good start. So, is there any other opinion about edging that anybody knows? Okay, I guess nobody knows.
No.
All right, hedging is kind of like countering your position. So as you said, Mukhtar, buying and selling at the same time. So for example, there's different type of edging. Oh, I'm just gonna actually mute the mic. There's different type of edging. So there is the edging on the same assets and edging on correlating assets. So there's some assets that they have inverse correlation. So if a product is going up, the other one goes down. And if it's going down, the other one goes up, vice versa. So for example, USD, JPY, and gold kind of does the inverse every now and again. So for example, if I was buying gold, with, let's say, two lots instead, but I'm not really sure, like, okay, if gold is really gonna go up, I could decide to edge my position and sell USD JPY for one lot. So if I buy gold for two lots, let me just put that here. So it's,
Bro, we're still seeing your seasonal chart.
oh my days, I didn't share the entire screen, my bad. So this makes sense. Thank you very much. So basically, if I buy gold for two lots, right, what I want to do is I would sell USD JPY for one lot. Now, the main reason is this: if the trade does go in my favor, I would only take half of the profit, because obviously this will be in the loss scenario, in the losing scenario. So if I made 2,000 on this, I would have taken minus 1,000 in this as a loss. Ideally, if it was equal, but if I made 2,000 in this, for example, I could have maybe taken a loss of minus 400 or something. So if I minus that, I will still be in profit. And what can happen is, if, let's say, gold begins going down and this started going, up. So I bought gold, for example. Um, I bought gold and then gold started going down, and I sold this and this started going up. I'm in trouble. You understand? So at every point in time, what you want to do is this. So if we buy gold and gold goes up, that means this is going down, I profit. So if I buy gold, but this goes down, I have to make sure that I'm buying this, because when this is going down, this goes up. This is confusing. Have I confused anybody?
Nah, just opposites, basically opposite directions.
Okay, yeah. Basically, that's what it is. So you buy one, you sell the other, you sell one, you buy the other. But in scenarios that you're you're wrong, you understand, that would be a challenging scenario. This is the ideal way to edge. Just buy one, sell the other. But don't ever buy and buy. You're not edging. Excuse me. Don't ever buy and buy. You're not edging, because what could happen is, if he doesn't end up going in your direction, then you end up losing twice. That's basically what that means. Now, that's when you're doing inverse assets. So what about if you're doing it on the same asset, for example? Now, on this asset, for example, let's say I want to buy, right? But the moment I buy, the market seems to turn against me. I'm just gonna make. I'm just gonna try and make this as possible. The market seems to turn against me, and it started going down. Now I sell. I'm trying to get that straight. So buy, and then I sell. So basically, what happens is this: if I initially bought this asset to go up, and the asset then decided to start going down, so the up move didn't happen, this buy move didn't happen. Put the X right next to it and delete this. The buy move didn't happen, and sell start happening. What I tend to do is this. Now, there's two ways to do this. I mean, there's so many ways to do it, but ideally there's two ways. So if I bought one lot, what I want to do here, does anybody know what I want to do if this price doesn't go up? What do you think I would do here when I'm selling?
Probably double your lot size for
That
sell.
that's correct. Two lots.
Yeah, double lots. Yeah.
Beautiful. Now, I would sell two lots. Now, the question is this: when I bought, how much distance do I want to wait before I sell two lots? Does anyone know?
Nah, I have no idea.
This is a crucial question because if you bought one lot now, how many how long would you wait to sell? Now, what people would ideally do is wherever your stop loss is meant to be. So if you bought one lot, for example, and your stop loss is 20 pips away, that's where you want to start selling from. You understand? You want to start selling from that point. But what then happens is this. What if the price now decide, okay, I got to where your stop loss is, which was a raid, and I start going back up? You understand? So you've already sold 2 lots now. How many lots will you buy back up? Does anyone know?
That's tricky. 4
This
lots.
okay, let's keep our standard ratio. This is gonna be funny. You're gonna understand. This market is very crazy. Now, let's say we bought 4 lots. Okay, I did lots wrong, but yeah. So let's say we bought 4 lots. Okay. Now, bear with me, guys. I know this is a bit messy. So let me just put this. Let me rearrange this a little bit. So I bought 1 lot initially. Market tend to get to where my stop loss was. Let's say that was 20 pips away. Let me just highlight this as 20 pips distance. Just example sake. So let's say this was 20 pips. The distance between here is 20 pips. Now I bought 1 lot. Market didn't go in my direction. Then I decide to sell 2 lots. Now, apologies, guys. I just don't like the way the label said 2 lots. 2 lots. Okay. I bought 1 lot. The market didn't go in my direction, so I decided to sell 2 lots instead, right? And now this market just all of a sudden turned back up. Immediately I sold, it literally turned back up and started going back up. Now I waited to where I bought my first lot and I bought 4 lots instead. Now, ideally, where would your take profit be? Does anyone know?
Probably 20 pips again, above again.
Close. Your take profit will be 10 pips because 2 times you're buying 2 times what you sold.
Okay.
You understand? The distance between here and here is 20 pips. So when the market moves 2 lots against you right here, you're already minus 20 pips into it. By the time you're here, 10 pips into it, you're minus 30 pips into it. You understand? Now, no, actually, let me say that again. Let me do that again because this is 2 lots. So if this was 2 lots, for example, by the time you're here, obviously it's minus 20 pips into the loss. And by the time you're here, you're minus 30 pips into the loss. But when you double that, let's say each pip is worth let's say one pounds, for example. So by the time you're here, you're down minus 30 pounds. Please keep with me. If anybody has a question, please let me know. So by the time you're here, you're minus 30 pounds because you're 20 pips. We're using this equating the pips into prices. It's different, of course. So minus 20 pips. And then by here, you're minus 30 pips, right? So now you moving 2 times the size of this upwards. So by the time you're here, 10 pips in profit, you should ideally be break even with the 30. Have I confused anybody, or should I explain again?
Can you
re-explain?
Yeah.
Okay. Now let's say this. Let me try to see if I can do this in a different place. So, let me try to see how to break this down. So, let's say 2 divided by. I'm trying to find a way to make it very simple. Apologies. Trying to find a way to make things very simple. So let's say 20 minus 20 down, minus 20 pips. Right, minus 20. So, and I have, let me just, one entry. So I have one entry, which the space between here and here is minus 20, right? The distance between these two layers is minus 20, right? And that's one entry. Now, to take this minus out of the play, I have to get plus 20,
Yeah.
right? Now, to get plus 20, in ideal scenario, right here, for example, it's 20. I have to get plus 20 to break even.
Exactly.
Well, it cannot be plus 20 because the distance between here and here is now 40. Right? So the distance between this part, this two section right here, is 40. Right?
Yeah.
Have I lost anyone? Simple.
Oh, it's fine.
Please, if I'm losing you, please let me know. Please. It's important because in the market, you would have to compute all of this in your mind ASAP. Now, the distance between here and here is 40 because the distance between here and here is minus 20 plus 20. Obviously, if you do minus 20 plus 20, it should give you zero. That's what we're literally trying to get to, zero loss. So if I had one entry, which is here, by the time this one entry gets here, I'll be down minus 40 pips. Is that clear?
Yeah.
Minus 40 pips. Right? Minus 40 pips. Now, how big must my entry be to cover this minus 40 pips? Does anyone know?
Um, it has to be times 2 of the first entry that you got to break it.
It has to be times 4. Times 4, literally. It has to be 4 times. The main reason it has to be 4 times is this. If this is my entry line right here, this is where I got my first entry, right?
Yeah.
And which was somewhere around here. And price moved away from me. I'm already down 20 pips. So I got my second entry right here. I'm just literally re-explaining everything I was on the right. I got my second entry right here. Now, this second entry is now 20 pips away from my original place. And what I expect is if price moves down right here, I would, if price keeps moving down, price has to move somewhere around here, which is 1, 2 times more. Let's say 2 times 3. But actually, I think it's had to be 4. No, let's say if price was 2 times more, that means if I had, I'm even confusing myself right here, guys. I've literally just lost my plot. Apologies. Let me just rewind myself. So my first entry is right here, second entry is right here. Now, if everything goes according to plan, if I had one lot right here, by the time I'm here, I'm minus 20 lots. So by the time I take my second entry right here, I entered 2 times the size. So by the time I'm down another 20 pips, I'm minus 40, right? So if I'm minus 40 around here, my entry size has to be, if I'm not mistaken, 2 in the place of 20 will give me 40. That's correct. Okay. So by the time I'm here, for example, let me just change this to 40 for a second. I'm going to re-explain just in case. You know, I know that I've confused people definitely at this point. If you're not confused, man, I got confused myself. Um, so by the time price gets here, my second entry, I'm already minus 40 from my first entry. So this two right here, so my first entry is already minus 40 pips in play, right? So my second entry has to make 40 pips to make it. Now, if I had two times the entry size, which is if I said I had two lots, for example, by the time two lots get to 20 pips into play right here, oh, my bad. I got the wrong thing. No, I'll delete that. By the time, let's get to the second place right here. Let me see, minus, this is an extra minus 20. By the time price gets here to this minus 40 zone, so minus 20 gives us minus 40. So I have to
Hey,
make,
hi.
hey, how you doing, Shanawaz? You good?
Fine, fine. How are you?
I'm fine, thank you. So by the time price gets here to this point right here, I'm already minus 40 in play, right? So now I have to make that minus 40 back. The only way I can make that minus 40 back is my 20 minus 20 times 2, which gives me 40, right?
Yeah.
Is that clear? Or should I re-explain? I'll go again one more time. So I'm just going to delete this up part and come back to that. No, I don't want to delete that. But ignore this. Ignore this part. Let's just focus right here. So I'm just going to put this right here so you can see that I'm trying to focus in here only. So I got my first entry right here. First entry. And excuse
For
the
yourself.
color, by the way. Huh?
Why buy or for yourself?
No, buy. We got the
Buy.
first entry for buy. Okay. We got our first entry for buy right there. The distance between here and here is 20 pips. So prices move down minus 20 pips. Okay. So once price is now minus 20 pips, I'm like, I have to make this 20 pips back. So I decide to sell 2 times the size of that.
Yeah.
Apologies. Apologies, guys. So I have to sell 2 times the size of what I had here. So by the time my first entry gets into minus 40 pips, I've already lost 40, right? So my
Yeah.
second entry, which is 2 times the size of my first entry, by the time it's 20 pips down, it's already gained that 40 back plus 40. So 20 times 2 would give us 40. Yeah.
In total from
Yes.
both entries.
Yes. So on 2 entries, you have 40. So minus 40 plus 40 gives you negative. It gives you literally 0. Is that clear?
If you're so on both of the lines,
Is
you're
that
putting
clear enough?
cells in
Or is
from
there, should I
the
re-explain that one more time?
so from the first entry and then the second entry. So first entry you're
Guys, can you
selling
hear
or
me?
you're buying.
Oh, my signal. I think my signal's gone.
First entry is
Oh,
buying, second entry is
what's
selling.
happened now?
I see. Okay.
How is this possible?
Yeah, so then it's 0 loss. Okay.
Hold on a second. Let me just see. Can anyone?
Yeah, we can hear you. Well, it's kind of.
Guys, I don't know if you can hear me, so I'm just going to hold on a second and just try
You
to...
just sound far away from your mic.
Oh, okay. You can hear me.
Yeah, we can hear you.
I can't hear anyone
Yes.
speak back, though. I don't know why. Definitely not having audio issues, am I? This is weird. Switch my audio interface. Can someone say something for a second, please?
Can you hear us?
Oh,
Hello?
okay. Yeah, I can hear you. For some reason. I don't know why it's not letting me hear you on my headset. I got you guys on the headset, but I can't hear you for some reason. Okay, I'm just gonna switch to my. All right, let me just take my headset off. Okay, so I'm just taking my headset off. All right, guys, can you hear me still?
Yeah,
Yeah.
we can hear you.
Good. Okay, so have I confused anyone so far?
No, it makes perfect sense now.
Makes sense.
I'm gonna run it through one more time, guys. Trust me, when you're in the market, everything flies out of the window. Honestly, I've been in this shoe so many times, and I know how it feels. So you get your first entry and price tend to turn against you, right? Now you're minus 20 pips. You get your second entry, has to be 2 times the size of your first entry, right? So by the time price move further down another 20 pips, so you're down minus 40, and your second entry is plus 40.
Plus
Okay,
40, yeah.
which nullifies everything. Now there's a third scenario, right? There's a third scenario in which price then moves back up. You understand? Price ends up, you add your first entry, price started going down, got to where your second entry was, triggered your second entry, then the third entry got triggered. Okay. Now, by the time your third entry gets triggered, don't forget your first entry will be on 0. You haven't made anything, you haven't lost anything. But right here, you'll be minus 40 in play. Okay. This 40 right here will now be minus 40. Is that, let me just see if I can get a clear. Let me start deleting some stuff so I make sense to you. Okay. I'm gonna move. So first entry, second entry. I'm gonna move the arrows and everything away. Just so I don't confuse anybody. I'm just gonna move all of this away for a second. I'm gonna pull them back in a second. I don't want to retype. So basically now, let's say you got your first entry right here. You got your first buy right here. And then what happened was market moved down. You get your second entry right here. And what I want to do now is this. I'm going to get a third entry, right? I'm going to get my third entry where I got my first entry. So I'm going to get my third entry right about here. Okay. So in that scenario, how big do I have to go? Because my first entry was just, let's say 1 lot. My second entry, I'm just going to label that as 2 lots. Okay. How big does my third entry have to be? Does anyone know?
4.
1 lot.
Nah, it has to be 4 lots. It always has to be twice the size of your last entry. So 2 times the size of the first entry is 2 lots. Then 2 times the size of the second entry will be 4 lots. Okay. So your third entry will actually have to be, apologies guys, this is not the best place to put this. I think there's a way to get a board on this stuff. I don't know if I can do a whiteboard. You guys can see the whiteboard, right?
Yeah.
So your first
This
entry,
is Martingale strategy, I think.
huh?
This is Martingale strategy.
Well, I didn't hear what you said, mate.
This is Martingale strategy. Double the size of lot. Double the lot size when your trade is in loss for 20 or 30 pips around.
Sorry?
When hello, can you hear me?
I can hear you. Yes, I can hear you now.
Yeah. So when the trade is actually, this is Martingale strategy.
Martingale strategy.
Yes.
Yeah.
That's correct. Okay, so the first entry, we'll call that 1 lot. Second entry, I'm just gonna put 2 lots. Third entry, which will be right where your first entry is, that'll be 4 lots. Okay, that'll be 4 lots. Now, what you're gonna do is at 4 lots, you have to be 20 pips in profit, or whatever your stop loss size, or whatever the distance between here is, in order to break even on this position, right? So you have to be, what's it called, 20 pips? I don't have a smart board right here, guys, so I'm just literally, everything looks like a mess. You have to be 20 pips in play right here to actually cover this position. You understand? So if you're 20 pips in profit with your 4 lots, with 20 pips in profit should give you if I'm not mistaken, let's just call that let's call that 80 pounds, for example. And then this one should give you, because it's 4 times now, it's 40 pips right here, which is your 2 lots times 40 pips, should give you minus 80. Now, minus 80 plus 80 will cancel each other out. So that will give you 0, in which your 1 lot would be 20 pips, which is 20, let's say 20 pounds in profit. Is that clear?
Yeah.
Yes or
So
no?
basically,
Please.
you're not closing any position.
Huh?
You're not going to be closing any position.
You're not going to close any position. No, there'll be an anchor to each other.
Okay.
Okay. Have I lost anyone? Please, guys, if I've lost you, please. This is important, because if you do this without getting it right, you'll get screwed. This is literally the easy part. Okay?
Yeah, it's clear.
All right, cool. No problem. Now, there's one thing I want to share with you guys now. This is it. Now, I'm just going to quickly open a new one. I'm not going to delete this. I'm going to come back to this probably later. I'm going to open this right here. Now, guys, with this edging stuff, this is how we do it. I don't know which entry stuff that you guys use. Whatever you use as your entry, right? You would have to follow that indicator. So now let's say, for example, I'm using this as my entry indicator. Rather than me waiting 20 pips before I go into a trade, I would go only when my entry indicator tell me to go in the opposite direction. Then I have to use my mind accordingly to see what lot size is going to actually cancel it out, okay, in a very short distance as possible, okay? So basically what I'm trying to say now is this. For example, let's finish loading. Let me see if I can find a good part right here. So I'm just going to find a buy entry somewhere, right? So let's say, for example, I went into this trade right here, right here, right? I went into this trade right here and I bought 1 lot, okay? Now, at this point, I'm still in profit, and then price started turning against me. I would have ideally waited 20 pips from where I entered from, right? Which should be maybe somewhere around here before I get my second entry. But that's not what I'm going to do. What I'm going to do is this. I'm going to wait and wait and wait till I get a signal in the opposite direction, right? When I get a signal in the opposite direction, only then will I trade the opposite direction. Okay. Now, in this scenario, you have to go in more than 3 times. And now this is why in when you're doing this, you have to keep increasing. The Martingale strategy, as Anshana has already said, is very, very risky. And I have to tell you guys, if you're doing this, this is really risky. You have to go in with the smallest size, lot size possible, just in case you don't want to blow your account. And this will be a very good example now that you're going to see. If I went in my first entry right here, entry 1, let's say that right here, 1. Okay. Now this is 1 right here. I went in right about here as 1. And then
Martingale strategy is very dangerous.
Very, very, very dangerous, man. Right about here, I went in my entry. If you don't have big account, don't even bother. Don't even bother. If you have you know, $1,000 account, you better start edging with maybe you might start your entry with 0.02 and then just edge your way. But if you do it correctly, you'll be fine. So now in this second scenario right here, between here and here would give me how many pips? 18 pips, right? So I need an extra 18 pips somewhere around here to break even. 18 pips somewhere around here to break even. Okay. Now what happened is, classic example, price turned back. And don't forget, this was my entry in both sides now. So I'm in this trade 2 times. What's that? So I'm in here, entry 1, and entry 2. So what happened is, oh, damn, wait, please tell me triggered. Okay. This literally got almost here let's just say, example says this triggered perfectly into your third buy trade. Okay. Now price tend to wait. Let me see your third one. We can't really count this. Don't forget, guys, you're only gonna trade when you get the signal, right? So you got your buy signal here, you bought. You go to your sell signal here, you sold, right? The only time you're gonna take your next trade is when you get your next buy signal. You understand? Is that clear? Yes, no, maybe so, guys.
Yeah. Yeah.
Yeah. So this one, this entry right here wouldn't be valid. This 3 right here, you wouldn't just jump in because price is on the same line. You
Yeah.
understand? What would eventually happen is this: when price comes down to about 18 pips right here, you've broken even. So your loss at this point is 0. Yeah? Is that clear?
Yeah.
I was wishing that this gave a buy entry somewhere around, somewhere around here,
Yes.
but it didn't give a buy entry. So at this point, when price gets to this point, you close both trades, both. You have to let that trade go and then start again. Simple as. Don't try to say, okay, you know what? This is in profit. I'm just going to close this one, because market could literally turn back and take that 0 that you have in loss and take it to minus something for you. Okay. So that's how you do it. But let's say, for example's sake, this was a third entry. You took this as a third buy, right? And price turn. You're going to take your fourth sell right here, which is 2 times the size of this, and then possibly take your profit somewhere around, what's it called? Around here, which means you have to close all trades regardless. Is that clear? Or should I re-explain? Guys,
clear.
please, I beg you. If you need me to re-explain, I'll re-explain as many times over. If you don't get this right, your account is gone. So please, if you have questions, please ask the questions. Okay. Nobody has any question. So your first entry is right here. Only go in when your indicator tells you to go in. Your second entry is right here when your indicator gives you your second entry. And your third entry, there is no third entry, because right here where I wrote third, there isn't any buy signal. There isn't any buy signal at all in play. Now, don't say, okay, because price came down, I gave you a second sell signal right here, you're going to end up selling again and closing all trade. If you do this, you're doing this at your own risk. Please no. Understand? You can do it, but you better know what you're doing. So if you do it at that point, you're going to definitely lose if this goes against you, because now your strategy is no longer in place. So follow the strategy. At this point right here, when price got here, you have to still wait till you get a buy entry. If you don't get a buy entry, you're in the clear. So you don't need to go your third position. So you hold until price gets here and you have 0 loss. And that's how to do the game. So what's going to happen is this webinar is going to end. I'm going to start it over again, and then we're going to go over another example over and over and over again, just to solidify this in, okay? I hope that's clear. I'm going to start it right now. Just give me 2 seconds. I'm going to start it. It's going to take a 1 minute break. Let me go get some water and I'll start it. Okay?
All right.